Good afternoon, everybody, and welcome to this episode of Startup TV. Oh, I just put me on mute there because I think we're getting a bit of feedback. Yes, welcome to this episode of Startup TV. Today we're joined here by Emily Coltman from Free Agent, who's going to be talking about Invoicing 101.
All limited companies, if they're trading, need to complete invoices. Today, Emily's going to look at the do's and don'ts of doing this and everything else in between. Now remember, at the end of the webinar, if you do have any questions, tweet them to @MadeSimple Group or email them to alexn for November @madesimplegroup.com, and we'll put these to Emily at the end.
Okay, so Emily, we'll hand straight over to you and get started.
Thank you very much, Sarah and Matthew. Good afternoon. I'm Emily Coltman from Free Agent. As Sarah mentioned, I'm Free Agent's Chief Accountant. Free Agent makes online accounting software for freelancers, contractors, and small service-based businesses. And I'm here, as Sarah and Matthew said, to talk about invoicing. So let's share my screen. Okay, I'll just move that to front tab. And I shall share my screen. So, and great. So now you should be able to see my screen.
Yes, we can.
Brilliant. Okay, so Invoicing 101, basic invoicing. Just exactly what is an invoice? Well, an invoice is a document that you give to your customer when you want to be paid, so they're kind of important. An invoice will show your customer how much they're due to pay you and for which goods or services. And in this webinar, we'll look more closely at what you need to put on your invoice, and I'll give you some suggestions for how to make sure you get paid on time. So what are the legal requirements for when you issue an invoice? Well, if your business is a limited company or a limited liability partnership, your business must show your company's house registered number and address. You see we've got the address there and the number. And if you put the name of one director or member on your invoice, you've got to include all of them. So you see I've put on 2 names there. If the company had more than one director, you've got to list all of the directors if you're going to list any of them. By the way, limited companies have directors, limited liability partnerships have members. That's the distinction between the 2 of them. So that applies to all limited companies. There are extra rules if the company happens to be registered for VAT. If the company is registered for VAT, you've got to include your VAT number on your invoices, and you must comply with HMRC's rules about VAT invoices. What are they? Well, the rules are that each VAT invoice must show. It must have a sequential number, an invoice number that's unique and follows on from the number of the previous invoice. If you spoil or cancel a serially numbered invoice, you must keep the spoiled invoice to show to a VAT officer in case you get a VAT inspection. By the way, you don't have to use the same invoice numbering sequence for all of your invoices. You can have an invoice for each customer, an invoice for each product, a sequence for each type of sale, but you've got to have sequentially numbered invoices. That's the key point. And no 2 invoices must have the same number. You've got to have the seller's name, that's your name, your company's trading name and its address. You must have the VAT registration number, as I mentioned. You must have the invoice date. You must have the time of supply, or also known as the tax point. Now, often that will be the same as the invoice date, but it might sometimes be different. For example, if the date of your supply is more than 15 days before the invoice date, in that case, the tax point is the date you made the supply. You must include the customer's trading name and address. I beg your pardon, that is the customer's address. Your address is up here, but they must both be on the invoice. You have to put a description sufficient to identify the goods or services that you've supplied to the customer. If you're giving a cash discount, you must put the rate of that. You must put the total amount of VAT you're charging expressed in pounds sterling. And for each different type of item, whether that's goods or services that you're selling, the invoice has to show the unit price excluding VAT. It must show the quantity of the goods or the extent of the services. So you can see there we've got the extent of the time. It must show the rate of VAT that's applicable to what's being sold, the total amount excluding VAT, and you see there we've got an invoice total to show the customer how much to pay. If you issue a VAT invoice that includes goods or services which are zero rated for VAT or exempt from VAT, you must show clearly that there's no VAT payable on those goods or services, and you must show the total of those values separately from those that are charged 20% or 5%. Now, exempt and zero rated sales for VAT are not the same. Exempt sales have no VAT on at all, whereas zero rated sales do have VAT on, but at 0%. I know that sounds crazy, but it is the truth. You can have items that have VAT on them at 0%. If you're not sure which rate of VAT to apply to your sales, we would advise checking with your accountant or with HMRC. Now, if you happen to be a sole trader and your business is not registered for VAT, you're not subject to the legal requirements like these, but I would say it's best practice to keep to the same rules as for VAT invoices, except of course you won't charge VAT. You cannot charge VAT if you're not registered. That's to help make your invoices look professional and to avoid any queries from either HMRC, the taxman, or your customers. In particular, if you use sequential numbering for your invoices, then HMRC can easily see that you've reported all your income. If you don't report all your income, HMRC might charge you more tax because they might think you're hiding income. Getting your price right, really, really important. Do make sure that you charge the correct amount on your invoices. Otherwise, you could find yourself in the very embarrassing position of either having to ask your customers for more money or give them some money back. If you quote for goods or services, and when you issue your invoices, make sure you use your most recent pricing, and don't forget any special discounts or special offers that you might have promised to that customer. Now, here's a quirk. Remember that if you are issuing estimates or quotes before you do your work, an estimate is not legally binding. That is, you don't have to supply those goods or services at the price on the estimate if you discover the estimate's too high or too low. But a quote is legally binding, so you do have to supply what you offered at the quoted prices. Watch out for that. Do remember that if your business is VAT registered, HMRC say that you must include the price per unit on your invoice. That is part of the legal requirements for VAT invoices. You can't omit it. What about other information that you need to have on your invoice? Well, in the immortal words of Mr. Rochester, describe it, Jane. Make it clear. VAT invoice rules say that you must include a description of the goods or services sufficient to identify what you're selling. Make sure the description is clear enough to forestall any possible queries from your customers. If they have to call you to query the invoice before paying it, that's going to put a brake on your cash flow. So for example, if you are a customer, you receive an invoice, you look at it, you think, well, what on earth does that mean? I'll have to ring up and find out. Well, instead of having to ring up to find out, you could have gone straight onto online banking and paid it. So you see, if you don't put a full description on your invoices, you could be holding up payment, and that's not a good idea. Also, do make sure that your invoice shows clearly when and how you expect your customers to pay you. In other words, your payment terms. I'm going to talk a bit more about that in a moment. Branding. Remember that your invoice is a document you send out from your business, so do make sure that it reflects your brand. Think about your logo, think about colours, think about fonts, wording of the item descriptions and of your payment terms. For example, if the brand message that you want to get across is fun and quirky, then make sure that your payment terms aren't written in lawyer's English. Now, what about getting paid? Make it as easy as possible for customers to pay you. If customers have to struggle to pay you, it'll take them longer. Include your bank account details on your invoices if you're taking payment from online banking or by BACS. If you send your invoices by email and you use a service like PayPal or Go Cardless to collect payment from your customers, then include a link when you email the invoice so that customers can pay you just literally with one click. They get the invoice, click, straight to PayPal, they pay. And what about sending the invoice? because until the customer has the invoice in their hands, they won't pay it. So you need to make sure you send it. Make it part of your regular bookkeeping routine to send your invoices. If you can, invoice for all or part of your fee before you deliver the goods or carry out the work. That gives you protection against defaults or delayed payments. If you can't invoice before you deliver, then invoice as soon as possible after you've done the work. If your customers don't pay on time, then chase them. You can set free agent to chase invoices automatically, and I'll show you how to do that later. Do check which is the best way for your customers to receive invoices. For example, some may prefer them to be posted, some may prefer them by email. Do make sure you've got the correct address for your customer, whether that's a postal address or an email address. Invoices have gone unpaid in the past because they were sent to an old email address or a postal address from which letters aren't forwarded. The less hassle customers have to go through to pay you, the quicker they'll pay. And don't forget to keep track of who has and hasn't paid. So I'm now going to show you a little bit about how free agent handles invoicing and some pro tips for making your invoicing quicker. So here I am in a free agent account, and I'm going to go to the invoicing area. It's really, really quick and easy to create an invoice in free agent. I'll just quickly show you. There's one I prepared earlier. You can see there, this is a cake maker's business. I've branded the invoice with the logo. I've got my address, I've got hers. This business isn't registered for VAT, so I don't have to have that. But I've got the invoice number, I've shown when the payment's due, and also, crucially, I've got the bank details on the invoice. So that's making it really, really easy for the customer to pay. So in terms of a few little quirks that you can use to speed up your invoicing when you use free agent. Well, the first thing you can do is to duplicate an invoice from another. So just literally, I've gone to More and Duplicate Invoice. And that actually lets me go through the stages of setting up the invoice. You'll see there it's automatically incremented the numbers. Remember I was talking about how important it is to use sequential invoice numbering, that in some cases it's actually a legal requirement to do that. Well, free agent's done that for me. It's automatically added a +1 to that invoice number. It's chosen today's date. It's put my payment terms as 30 days. Now, I did want to talk a little bit more about payment terms. Payment terms are how long you give your customer to pay you, and it is for you as the supplier to set your payment terms, and it is for the customer to keep to them. I feel quite strongly about that because there are quite a lot of cases, particularly in the cases of small businesses selling to larger businesses, where the small business supplier says, I want to be paid within X number of days. The large business turns around and says, well, we only pay every month and we pay on 60 days. Now, it is then up to you. Do you actually want them as a customer? Will they buy enough from you to make it worthwhile? Are they trying to beat you down in price as well as holding back their cash? Make sure that you're not dazzled by the idea of selling to a big business. Take a breath of fresh air, take a step back and do some cash flow planning. Think about, can you actually afford it? Can you afford to take this contract, which will probably be a very demanding one? The big businesses will want you to do things their way. Think about, can you afford the time? Can you afford the money? And can you afford to have the cash coming in more slowly than you normally would? Or is that going to slow you down when it comes to things like paying your own bills? Are you going to get into a bad place with your suppliers because your customers are paying you too slowly? Or are you not going to be able to pay your taxes? Or worst of all, are you not going to be able to pay your staff? Think about it, plan it very carefully, and if in doubt, then you will have to go back to your customer and say, look, no, I'm sorry, you must keep to these payment terms. Do be aware, yes?
Emily, sorry, question.
Okay.
So it's entirely up to the business owner on how long they should give the suppliers to pay.
I'm sorry, Sarah, you actually broke up a bit there. Could you say that again?
Sorry, is it entirely up to the business owners how long they want to give their suppliers to pay?
How long they want to give their customers to pay?
Is it entirely up to the business owners?
Yes, so in terms of how long you want to give your customers to pay you, yes, that's basically up to you. I mean, there may well be an industry norm, for example. If you think of something like private school fees, they're usually due in advance of the term starting. if you think of something like an IT contractor, they may well say, well, I'd like to have X amount paid up front as a deposit and Y amount paid at the end once the project's completed. So it is for the business owner to set the payment terms. The customer may well negotiate. The customer may say, well, hang on a minute, I'm a small business too, I can't afford that. Can we make it 25% instead of 30% up front? And then it is up to the supplier to decide whether they want to accept the contract on those terms or to say no, thank you.
Okay, great, thanks.
Yeah. Does that make sense?
Yeah, definitely.
Okay, great. So also what you can do as you're creating your invoice in Free Agent, you can set additional text, and that's quite important because that is what will let you put things like your registered office and your names of directors. You saw in the invoice I had on the slides that I actually had the registered office address and the names of the directors in that box. This business here I'm demonstrating with, it's not a limited company. That's why I haven't got that separate address in there. But that's where you would put it if your trading address and your registered office are different. Because quite often limited companies will have their registered office at, say, their accountant's office, or you might even have it at the MadeSimple office. That is something else you do, isn't it, Sarah? People can have their registered offices at MadeSimple. Oh, I think they might have muted. Okay, well, I'll just keep going. So in terms of the more options area of Free Agent, what we've got here is something else that I really wanted to highlight, and this is where you can have email reminder rules for invoices that go unpaid. I'll come back to the thank you one in a minute. So here we have the reminder emails, and these are really useful for chasing customers and reminding them to pay. You see, I've got two sets set up. I've got one set up to go the day before the invoice is due. So you can see there, I've set up a friendly automated reminder that this invoice is due for payment by tomorrow. So that would go before the invoice is due. But then after the invoice is due, I've set up one reminder to say that the invoice is overdue and please pay as soon as possible. But there's nothing to stop you setting up a whole sequence of these reminder emails. So you could have, for example, one set to go 2 days after the invoice is due, so just a little bit overdue because it might have just slipped the customer's mind to pay you. And you could have a more strongly worded one going the following week and progressively on until you get to the point where you're saying to your customers, I will supply you with nothing more, I will take you to the small claims court if you do not pay up. You can make them progressively stronger, or you can do what I've done here and have a repeating one. Up to you. But we've had a lot of positive feedback about those from our customers because they actually enable you to chase unpaid invoices without having to have an awkward phone call. Because one thing that I've found working with small businesses is that they simply hate talking to customers when they're owed money. You've got to remember that you're owed that money, you've done the work, you've supplied the goods, your customers should pay you. There isn't really any excuse for them not doing so. So do chase them if they don't pay you. Now, I mentioned as well the invoice thank you email. What that lets you do is, as you see, send an automatic thank you when your customer pays an invoice. And that's just nice for the customer to receive because then they know that you've received their payment, it's been allocated against the invoice, you won't chase them, everybody's happy. So back to the invoice. So I mentioned the automatic email reminders and duplicating one invoice from another. What you'll see actually if I go to that list of invoices, you'll see there's a whole sequence of draft invoices created. You'll see that each month I've got one invoice for £25 and one for £50, and those are recurring. Now those have come from here. Recurring invoice profiles. You'll see there that I've set up 2 profiles to create invoices every month. And if I go into one of them, you'll see there's the profile. It looks just like an invoice. So that's like a skeleton invoice of what's being created. And you'll see there that it's creating a draft invoice every month. It's sequencing the next number available. So you'll notice there it's got 21, but it goes to 24 because 22 and 23 have already been created somewhere else. So there's no duplication or anything like that. Oh, hang on, the light appears to have gone out in here because I'm sitting still. It thinks I've vanished. Well, I haven't, so I've just moved to bring that light back on. Sorry about that. So there we go. It's creating those draft invoices. And what I could do if I wanted to is automatically set those invoices to be sent every month. Now, I haven't done that because this is a demo account and I don't want a random person getting random invoices, which they're not expecting. But what I could do, if I edit that profile, I'll show you how I would do that, is to email it automatically. There's a default invoice template set up to send new invoices. So what you can basically see there is automation of the whole invoice process. You can either create one duplicate invoice from an existing one, or you can set up a whole recurring profile. You can add invoice items to it, and then you can send those invoices every month. Now that is really, really useful if you're regularly supplying the same goods or services to the same customer. So for example, if you're charging a regular monthly retainer, you can set up recurring invoice profiles to send automatically on, for example, the first of the month or the last of the month or whatever it may be. And then those will go automatically. You won't have to worry about it. So in times gone by in finance departments, you might well have found somebody chained to their desk at month end, unable to take holiday at that time because invoices had to be created and sent. Well, this is actually going to save you having to do that. It'll do it for you. So you'll see there, it does the sequencing, it does a regular monthly date, it picks the payment terms from the profile, and it can even send those invoices automatically. That is really, really useful. So I've talked a little bit about creating automatic invoices. What about the final step in the process, which is making sure that your customers pay? Well, there's several places in Free Agent that warn you if customers haven't paid. So we've got the invoice timeline. I'm going to scroll back a bit. You'll notice these bars start appearing. This shows what's been paid and what hasn't. So you've got the red there for overdue and you've got the green for paid. Any invoices that were due but not overdue would be in amber. So that's a quick flash. Also on the page that lists all your invoices, you can see which ones are overdue in red. You can see those which are paid in green. You can filter the list to show you just those that are open or overdue. So we've got a few overdue ones, including a very big one that really does need to be chased. And then you've also got a breakdown report which is called aged debtors. Now that is accountantese for customers who owe you money and have not paid you yet. As I say, in accountantese, that's called aged debtors. You might also see it's called accounts receivable or sales ledger. But those are all fancy terms for a list of customers who haven't yet paid you. And you can see there you've got the invoices. So for example, if I wanted to see what that big invoice was for, I could click the number. So I can click the number of an invoice and I can see it. So why might Bobby Green not have paid me for that? I can look into it, I can investigate, I can ring him up. If I go back to my aged debtors reports, what I can also do is click straight through. I can shrink that. So for example, if I only want to know that Mary has not paid me in total, I can shrink that. And I can also show that report as at any date I want. That's useful if you're working with your accountant and your accountant asks, well, I want to see your aged debtors as at the end of the year, then you can do that. So those are just a few ways to make invoicing work really well in Free Agent. Do, I would say, make use of a tool like this because it can really save you a tremendous amount of time. If your invoices haven't been paid, your business is going to run out of money and then it can't survive. In terms of the estimate and quote process, I would just quickly like to show you, because I've got a few minutes to spare, that you can also create estimates or indeed quotes through a product like Free Agent. You can then mark those as approved, you can convert them to invoices. We do also integrate with a product that's called Right Signature that allows you to automatically email your estimates to your clients and get them approved, and that is really, really useful. So you can create the estimate, you can turn it into an invoice, and then once you've got the invoice, you can speed up your process by creating duplicate invoices, by creating recurring invoices. You can automatically email your invoices out to your customers. You can automatically remind them that they haven't paid. And then you can use the aged debtors report to keep track of customers who don't pay you. Because remember, that is the really, really crucial bit. Get your invoices out in time, get paid for them when your customers say. And going back to the whole subject of payment terms, what I would say is agree your payment terms with your customer before you do any work at all. Don't work for your customer thinking that you can get agreement on payment terms, because what happens if you don't get agreement on your payment terms? What happens if you realise that you cannot work with a customer on those payment terms? You'll have done the work, or you'll have supplied the goods, and you'll be left with nothing. You'll be left either time poor or out of cash or with fewer goods than you should have. Watch out for that. Keep your heart hard in this situation. Don't do work that you're not going to get paid for. Okay, so that was what I wanted to show you in Free Agent and to talk about invoicing. So did we have any questions through? Shall I unshare my screen and go back to that?
Yes, well, let's see your face, Emily, your lovely face.
Thank you for the
That's some really good tips there. Yeah, I think it's a real big problem with a lot of businesses we hear is trying to get that cash,
yes,
cash flow and trying to get invoices paid. So I think it's something that a lot of small businesses can relate to, definitely.
Good.
Yeah, we have had a few questions through, Emily.
Great.
First up, can you give an example of sales that are exempt from VAT and sales that are zero rated? And is this anything to do with tampon tax, quotes that have been in the media lately?
So an example of sales that are exempt and sales that are zero rated, I certainly can. Exempt sales tend to be things like insurance, postage stamps, quite a lot of medical services are exempt from VAT. So if you go to a doctor's surgery, for example, those services that the doctor's providing are exempt from VAT. But strangely enough, if it's a dispensing doctor, so you've got a pharmacy on site, the services of the pharmacy are actually zero rated. So doctor is exempt, pharmacist is zero rated, and other typical zero rated services and goods would be air travel, that's zero rated, taxi fares, typically zero rated, travel is the big one. Also some areas around property conversion can be zero rated. Standard rated is the most common one, 20%. But as I say, those are some examples of exempt and zero rated. Now, tampon tax, what's that about? Well, women's sanitary products are one product that's subject to what's called reduced rated VAT, where the VAT is charged at 5%. And women across Britain say, well, hang on a minute, why should we pay 5% VAT? Sanitary products are really not something we can do without. We shouldn't have to pay so much VAT on them as 5%. They should be zero rated or they should be exempt. But unfortunately, the reason why the government's not in a position to change that is because when we joined the EU back in 1970 and we signed up to the VAT code for the EU, what that said was thou shalt not make any more products or services zero rated or exempt from VAT than already are. So that is why we're stuck with the 5% rate on women's sanitary products, and why it would take the approval of all the EU members, all the EU member states, to reduce that to 0% or exempt. And you know, that is why ebooks are standard rated, whereas printed books are not. Because when we signed up for VAT, printed books were already 0%, but there wasn't no such thing as ebooks in 1970. So when they came out, they had to be standard rated because we could not make them zero rated, weren't allowed.
That's fascinating. You learn something new every day. I didn't know any of that.
You also mentioned invoicing before actually doing the work. Is that really okay? Are customers normally happy to pay before the work's been done?
I would say so, yes. I mean, the example I'm thinking of here is an IT contractor, somebody building an app. So for example, if I've had an idea for a fantastic app, but I can't build it, I'm an accountant, not a web designer. So what I would think there was, if a web designer or an app designer said to me, Emily, I'm going to charge you 30% upfront and I'm going to charge you the rest when I've done the work. What he's doing there is he's securing my commitment to the project. He's making sure that I'm not going to turn around and say, well, actually, I can't be bothered with all of this, just forget about it. And then he's not going to find himself battling with me to actually get the money. He's secured my commitment to the project and he's spread the risk, making sure that he's not going to put in a whole lot of work and then found himself faced with work he can't use, code he can't use, not faced with having lost a lot of time through doing work that a customer's not committed to. I'd say that's actually quite common practice in the, particularly in the web industries, but in certain others as well. Now, I quoted private school fees, but if you think of tuition of any kind, you usually have to pay in advance of the lesson. If you think of, for example, a child going to something like Cubs or Brownies, they have to take their weekly subs with them and pay on arrival. It's not unheard of, so I think it's perfectly okay to ask for a deposit or indeed for full payment up front, because it does help ensure the customer's commitment. If you think, for example, a holiday, you usually have to pay a deposit, if not the full balance, before you actually go on holiday, because then the tour operator knows that you're actually going to turn up. They're not going to find themselves at the airport with a half-empty plane or something like that.
Okay, yeah, that makes sense. Finally, I suppose the big one, what if a customer refuses to pay?
If a customer refuses to pay, now, of course, that is something that lurks in the back of a lot of small business owners' minds. The first thing I would say is it's really important to keep talking to the customer, because there may be genuine reasons why the customer can't pay. The customer might have had one of their customers default, for example. They might have been faced with a big unexpected tax bill. There's all sorts of reasons why a customer might not pay. So it does pay to have that dialogue with your customer, keep talking to them. But suppose you get a case where a customer just refuses to pay you completely, even though you've done the work, you've delivered, you've done what you said you would, the customer's still saying, no, no, not paying, not paying. Your final recourse, I would say, would be think about charging them interest and think about taking them to court. That might well be the small claims court, or if the money that they owe you is more than, I think it's £10,000, then it would be up to the next stratum in the court system. But remember, if you do that, then basically you're never going to be able to work with that customer again. Who wants to work with someone who sued them? So do keep it as a last resort, but equally don't discount it as an option, because as I said before, you've done that work, you deserve to be paid. If your customer's not paying you and you've done the work as agreed, it's not you who's in the wrong, it's them. So don't feel that you have to just let it go for the sake of dealing with them. And equally, I would say, if you've got a customer who's defaulted on payment, don't keep working for them, stop. Don't keep supplying them with services or with goods in the hope that they'll relent and pay you, because what you're doing there is you're throwing good money after bad. Put the brakes on, stop supplying them until they've paid you, because as I say, it's not your fault. It's down to them. If you've done everything that you've said you would, you've delivered a good quality of service, you've delivered everything you promised, and the customer refuses to pay, it's their fault if they're not paying you. So you need to have the conversation to find out why they're not paying, and then you need to push them.
Okay, thanks for that, Emily.
That's all right. Any more questions?
Oh, it's been a pleasure having you here on Startup TV.
That is a pleasure, thank you.
And hopefully we'll have you back in the future as well to talk about
Great, delighted. Thank you both.
Great. So that's it for this month's episode of Startup TV. We're back in just 2 weeks, actually, on the 20th of November.
2 weeks today. Yeah.
2 weeks today. We're back to talking to Not on the High Street, and they're going to be talking about how to successfully sell games online. So if you register for that, if you haven't registered already, Startup TV on our website, which is madesimplegroup.com/startuptv. And if you do have any more questions for Emily, please do tweet us at MadeSimpleGroup or email alex@madesimplegroup.com, and we'll make sure that all those questions do get answered by Emily. Okay, thanks for listening, everybody.
Thank you.
Thank you, Emily. Bye.